Okay, let's take a stroll through cash flow. And cash flow is a lot of fun. I think it's probably the most fun of all of the financial statements. Make sure you read the book. And let's begin by what increases and decreases cash flow on the statement. So we have a list of increases and decreases on, this is on the balance sheet. This would be shown on your statement of retained earnings, payment of dividends. This would be on the balance sheet, you would see that. You would see where this was issued on the balance sheet. A gain would be on the income statement. This would be on the income statement. Again, this is balance sheet, and this should show an increase on the balance sheet. A lot of times you have to analyze transactions also. But what we basically want to do is analyze what these do and where they're reported at on the cash flow. And you'll recall that the cash flow has 4 sections. And those 4 sections or categories, if you might want to call them that, are operating expenses, investment activity, operating activities, and financial activity. And what you want to do here is, by going through the book, what does an increase in accounts payable do? Where does it show up at first? Well, we know it's an operating activity. Does it increase or decrease the cash flow? So if this is an increase in accounts payable, look at your text and see what it says. Payment of dividend. Okay, dividends are financing, right? So if I'm paying something out, I'm decreasing my capital. Or my capital also, but my cash. It's a use of cash. Decrease of accrued liabilities. Okay, that's operating. It's going to have the same effect as the, or the opposite effect, I guess I should say. It's going to have the opposite effect of the increase in accounts payable. Did you find that in the textbook yet? An increase in accounts payable increases cash flow. So the opposite effect, if that's a decrease of a liability, that's going to decrease cash flow in the operating section. How about when I issue common stock? Well, we know common stock is finance. And we know when we issue common stock, we usually receive money for that, right? So that would be an increase in cash flow. Now this one's kind of confusing because it says gain on sale of a building. Well, what that does is that's already been recognized in net income, which is what we're adding to, or we're adjusting. So we basically, in the operating section, have to remove that gain, because where's that going to be added at? That's going to come up in investment, isn't it? More than likely. Then we have a loss. So I want to add that back in the operating section. And the depreciation expense is really kind of self-explanatory. It's a paper loss. So it doesn't really have anything to do with cash. It just has to do with, it will have a lot to do with net income and how much taxes we pay. But it doesn't have an actual effect on cash flow. So that has to be added back in under operating activities. We have an increase in inventory. So if I've increased inventory, what does that imply? That I have spent or decreased my cash flow, correct? So that would be operating decrease. Decrease in accounts receivable. So if I decrease accounts receivable, how does that affect net income? It really doesn't, does it? It doesn't affect net income, except for if I decrease accounts receivable, I've received money. And that's basically not in that net income, which is what I'm reconciling. So I'm going to have to add that change into the cash flow adjustment. And finally, if I purchase inventory, that's obviously an investment category or an investment activity. I'll get it out in a minute. And it's a use of cash. So to understand these, you really have to, I'm going to say that the liabilities here and here and the accounts receivable and the increase in inventory are probably fairly confusing. So reread those in the book. If I need to, I'll do another video to show you the effects of that. You want to keep your textbook handy. So now that we have these set out and ready to go, the rest of this activity or this assignment should be fairly easy. And here is the template to complete that top one. The next one we look at is, we are actually going to do a part of a cash flow, and we're looking at the operating activities. And we're using the indirect method, and that is on page, I think it's 8, 14, 15, and 16 in the book. So we're going to put the cash flow here, 40,000. And then we're going to do adjustments. Now, depreciation we know, right? So that's going to be added back in. And that is $10,000. Now, what do we do with this increase in accounts receivable and decrease in accounts payable? Well, if you look at the above, in the above we decreased accounts payable and we added to the adjustment. So in this case, we are increasing it. So we're going to deduct that. And that would be $9,000. Now, a decrease in accounts payable is, what do we do in the above one? What did we have for that decrease in or increase? I guess we had an increase in accounts payable. And that was an increase in operating. In this case, we have a decrease, so the opposite. So you can play off of what you've done in that first one, if that's not too confusing for you. So that should come up with a net cash provided by operating activities after you've adjusted all of this, the net income, depreciation, and the increase and decrease in assets and liabilities current, should come to $35,000. And now we'll move down to Brianna's, and Brianna is a wedding shop, and we're going to do the same thing here. Depreciation gets added. We purchased a building, we subtract it, and we borrowed, we added. We will add to it, and this should give us our true increase. This is telling you this is what my income was, net income, but from that income we've got to adjust to come up with the increase in cash from year to year. And then here, I want you to think about it and read the book carefully. And try to come up with why we added or deducted these. In this one, this is an activity where you're actually just analyzing each activity and explaining whether it's an operating activity, an investing activity, or a financing activity. Just to kind of get a feel for where all of these would land in the cash flow if you're doing an analysis of the transactions. And finally, you're going to do a true cash flow statement. And you're given the balance sheet, you're given the income statement, and I spelled that wrong. You will find instructions on how to do this on pages 814, 815, and 816. And we have a wonderful template that will tell you what to look for. You will do your calculations here, and this is what you should end up with when you have all of this filled out. And then the final question, which is the ultimate goal of this: how will what you've learned in this problem help you evaluate an investment? So cash flow is probably one of the best, if not the best way to make a decision about whether to invest in a company or not, because this tells where the money comes from. Very important. Give this a shot. Message me with questions. Let's learn together here. So have a really good day.